Let's take a look at the earnings fine print of InfoEdge, because we do have the management of the company joining us. Chintan Thakkar, who's the whole-time director as well as CFO of the company, joins us now. Chintan, good morning. Thank you so much for joining us today. Firstly, I wanted to ask you about your revenue growth. That is up by 3%. What are the factors that you're seeing contributing to this performance? And more importantly, what are the kind of expectations that you then have when it comes to the fourth quarter?
Well, actually, the revenue growth on a standalone basis is actually about close to 13% growth. And the real way to really look at it is the billing growth, because that's the lead indicator. Revenue kind of follows that. That is 16%. So as a standalone for the operating businesses, the billing and the revenue growth both are in kind of mid-teens, and that's a very positive news for us.
A very good morning to you, Mr. Thakkar. There's Cheryl also joining in the conversation, and I wanted to talk about 99 acres because when I noted, the losses have declined also for the company, and it is moving closer to break even. Is what you have a lot of brokerages highlighting when you talk about 99 acres. If you could help us understand the business and what you are mapping in for this one going ahead.
Yeah, if you really look at it, last 2-3 years, real estate sector has been kind of pretty reasonable for us, and that's the effect that you are seeing in terms of our growth. Our last year growth was also in kind of mid-20s. Now we have started clocking in, mid-teens. But more than that, what's also happening is that the expenses are not growing in that line. So there is some kind of economies of scale, some kind of efficiency that we are deriving from our marketing expenses. So our marketing expenses have remained flat, but the top line seems to be growing in mid-teens, and that's kind of leading to reduction in terms of the cash burn that we are having. And we are pretty hopeful that Q4 should be a profit, and we are also hopeful that the entire year results also should be. But this is something which is yet to be seen. But that's what internally we are getting.
All right, then, in terms of the budget, do you think the budget has in fact done enough when it comes to generating employment opportunities in the country? What's your take there as well?
Yeah, well, I think when I look at our JobSpec index, which we just published 2 days ago, and when you look at how the landscape of job creation is happening, it looks like that there are certain pockets which seems to be doing much better. And some of the state governments also seem to be doing much better than some of the others, right? For example, if you look at IT, sector, which is from the white collar job perspective, is very critical, not only for us but overall in the whole economy to boost the consumption as well. If you look at it, Jaipur has kind of clocked almost like 37-38% type of, so that's pretty significant. So we see that certain pockets, I think they are doing well. Also the GCC, which could be tech GCC, IT GCC, as well as non-IT GCC. That portion of of the job creation also is doing well. And what we think will happen is that more and more GCCs will come. The attrition in some of the other IT companies also will go up because of that, and that might kind of start the movement in the overall in the IT sector, and that could lead to a much better job growth.
I actually wanted to talk more on that. If you look at Naukri, the billings actually have continued to see a double-digit growth in this quarter as well. If you could help us understand what exactly is driving this sort of an acceleration and what sort of projections you have going ahead.
Yeah. So last quarter, Q2 and Q3 both have been in terms of billing growth. It's like mid-teens, and if you look at the components of that, IT, this quarter has kind of contributed about 16% in that. The non-IT sector is about 17% growth. Non-IT quarter before that was almost close to 20, so it's kind of slightly come down, but not really much of a difference. But also that to compensate with that, is the recruitment consultants have gone up to 9, and that's also very positive as a lead indicator that there is a movement in the consultant market, recruitment consultant market. That's generally being seen as a positive lead factor.
We've already talked about 99 acres and Jeevan Sathi as well. Do you have a timeline in mind when it comes to the break-even? Is there a timeline that you can help us with then?
Well, Jeevan Sathi also, we are almost break-even the last quarter as well as this quarter. In fact, last quarter we are almost break-even. Let's say that we broke even. This quarter there is little bit of cash burn, but it's not really significant. And we are hoping that Q4 also will remain EBITDA neutral for us. So in fact, 99 acres, Jeevan Sathi and Shiksha, if you take all the non-recruitment business, for us, those all together, if you take it, we are kind of, we are likely to break even, for this year. Shiksha is positive in any case for us. So that also will help, in overall making all three components together as profitable business units for us.
Talk about your actually margins, because a sustainable, or rather not sustainable, a very good healthy expansion that we've seen for your margins on a quarter-on-quarter basis. If you could help us understand how much of this is actually structural, where basically pricing power, operating leverage versus cost control?
I would say that both are there.
Okay.
And it's not so much about the cost control, but it's also about getting the the most bang out of every dollar that we spend. So it's more of efficiency that we are gaining, and that's kind of our DNA, that we are frugal, but we are very reasonable in what we expect when we spend money. And we are constantly deriving efficiencies, particularly from the marketing cost that that we spend. It's always kind of gaining some more and more efficiency over there. And there's not too much of a pricing, I would say, in terms of how the growth in the top line is. But there's also a volume growth, so the penetration growth, particularly non-recruitment business, as well as in terms of recruitment business, it's also led by a bit of a volume.
I also wanted to ask you about your growth roadmap, then delve a little deeper when it comes to your outlook. What are the kind of growth levers that you see? Which are the verticals that you in fact see leading growth then?
Well, the fact that all the non-recruitment verticals have started growing at a little bit faster rate, and and without spending much more money, I think that's the one of the growth lever for us, in terms of how much cash we are generating and the margin expansion that's happening. Recruitment business has always been that's the largest business and most profitable business, and usually grows at the fastest rate for us. So that continues to be stable, steady at the mid-teens. We are hoping that some of the positive signals, and like you mentioned about the budgets as well, that we think that if there's a more positive impact of that, then Q4, if we can get the growth rate of recruitment business from 15 to late teens, I think that would be great for us, and that could enable us growth in a short to mid term. In the long run, we would really want that all the four verticals that we have all are firing at the same time, and that would that's something which internally that's what we we strive for.
I want to understand about IT hirings, because you did speak about the fact that the attritions are also rising, isn't it?
Yeah, I mean, anecdotally, that's what we see, that attrition is rising. And the fact that GCCs are hiring more, we think that that could be a trigger for more attrition in the overall IT sector.
Lastly, I also wanted to ask about AI then, because there's an increase that you see in terms of AI investments going forward. Can you tell us what your plan then looks like when it comes to AI?
Yeah, as I talked about the efficiency that we are deriving from the cost, and I specifically mentioned about the marketing, I think AI is certainly helping us in deriving some of those efficiency, whether it's a content generation, or even in terms of product. For example, we have B2C product in recruitment, right? Then all the large language models are helping people, from the interview, AI-driven interviews and things like that. So we are pretty bullish about the how the AI is going to turn out for us, in terms of not only in terms of the cost efficiency, but in terms of the new products that we will be able to bring into the market, which are more AI-driven, and the efficiency that we'll bring it for our customers through that, and the eventual price realization for us because of that.
All right, Mr. Thakkar, thank you so much for taking time out and joining us today to share not just your earnings fine print, but also your growth roadmap and what that really looks like at this point. But